Credit union leaders, these are the topics we're covering today. Alignment. You know you need it, but how do you execute it effectively across your credit union? How do unconventional leaders get buy-in for unconventional initiatives? And the quest to become a primary financial institution, is it still relevant? Let's start the show. Welcome to Grow Your Credit Union, the podcast where credit union leaders gather, learn, and grow. I am your host, Joshua Barkley, and I am joined by my lovely co-host, Becky Reed. Becky, what's up?
Howdy, y'all.
Today on Grow Your Credit Union, we are welcoming the president and CEO of We Street Credit Union, Greg Gallant. Greg, welcome to the show.
Hi, thanks for having me.
We've all heard the A word. I'm talking about alignment. And you know what? Aligning ain't easy. About a decade ago, the Harvard Business Review published a large-scale survey revealing that 40% of managers cited failure to align as the greatest challenge to executing company strategy. And of course, fast forward to today, and alignment issues continue to affect organizations everywhere. In our pre-show meeting, Greg, you said that strategy is irrelevant without an aligned culture because credit unions can't execute a strategy without alignment. Now, here's the problem. If you need alignment to execute strategy, then how the heck do you execute alignment? So I have to ask you, Greg, what is your approach to achieving alignment at We Street Credit Union?
Well, I think it's very top down. First off, we have a set of core values that just don't live on the wall. We live by those core values, and we hire and we terminate on those core values. And we measure our culture for the last 10 or 11 years with third-party confidential surveys so that we know where we're at as far as the engagement scores and scale of where we're at. And so I think the other thing is the alignment at the C-suite as well as with the board. All of it has to work together.
Talk to me a little bit about the alignment at the board level and how you have gone about that in your career. Because I would imagine that you need the top aligned and then it trickles down throughout the credit union. So talk to me a little bit about your approach to aligning at the top level.
For me, it is, I have to be the torchbearer of what we're trying to do, and I have to make sure the board is in lockstep with that. And so that requires just a lot of discussion, a lot of visioning about what the organization needs to look like and what the culture is that we need to succeed, especially in a financial services industry where it's very competitive. So we spend quite a bit of time in our strategic planning sessions and in our board meetings talking about culturally, what does the organization need to look like based on what it needs to achieve within its strategic plan. I think probably my most frustrating time is I'm not a very patient person, and culture takes a while. So if you think that you can fix it in 3 years, it's probably going to take you 6.
Becky, talk to me about alignment, because I know that you understand the importance of aligning teams and cooperation and collaboration. So I am very curious to know how you aligned your teams when you were leading Lone Star.
Well, let's talk about culture for a moment. And you have a culture at your organization, whether you think you do or not. So culture is something that happens intentionally or unintentionally. And a lot of times there is a disconnect at certain parts of the organization, particularly when you're talking about the C-suite and at the board level. There's sometimes a disconnect between what those folks see the culture as being and what the people who have boots on the ground actually experience the culture being. So when Greg talks about aligning the organization, that's what he's talking about. What the folks with boots on the ground, because frankly, the board and the CEO we don't have boots on the ground. Okay. We don't. It's been a long time since we have actually been on the front lines talking to members every single day. Not to say we couldn't, not to say we haven't before, but that is not where we spend the bulk of our time. And so the people who have boots on the ground, who are actually talking to the members every single day, it's their culture, and the members are experiencing the culture through them. When you notice there is not alignment, you have to be quite intentional about creating alignment. And what that entails is walking the talk. What that means is doing what you say you're going to do. Whenever you are a leader in an organization, and that doesn't matter if you are a department leader or you are the CEO or you are the board chairman, everybody in the organization looks to see what you are doing. And when you say something like, we're going to align the culture of this organization, you have people in certain parts of the organization who snicker and go, yeah, okay, let's have fun with that. But you have to be out there. You have to talk to people. You have to create relationships, and you just have to be intentional about it. So if you want to create a certain type of culture, that's not usually a conversation you're having in the boardroom or at the executive suite. What do we want our culture to look like? Most organizations don't have that conversation with each other. So the culture just kind of happens haphazardly. So you have to be intentional. It sounds like what Greg has done is be intentional, starting with those board conversations. And then certainly that will trickle down throughout the organization organically.
So, Greg, when you think about what successful alignment looks like, what does it look like to you?
I think that really depends on where the person is in the organization as far as what role they are. I think what we strive for at the most basic level is that they understand where we're headed and what we're about. And then the further up the organization, then you start to get a little more clarity on the specificity of what that means. From the standpoint of what we work with our employees on is we let them know that this is an ever-changing organization and we are not risk averse and we're willing to try new things. And if we fail, we want to fail early and let's recover. And so we preach that a lot, so that they understand the personality of the organization. So when we're doing different things, they aren't intimidated by it. So I feel like that it's the constant reiteration of that message within the organization. And as a leader, you have to have the emotional intelligence to change that message depending on the audience you're talking to.
One thing I want to mention, and this is something that Greg taught me. It was a phrase that he used quite often that I have repeated ever since then. And it's says easy, does hard. And what that means is, sure, you can talk about it all you want, but actually implementing it and doing it is where the rubber meets the road. That's the difficult part. So aligning a culture, creating a culture, and walking the talk says easy, does hard.
Every credit union wants to grow, but not every credit union has the courage to explore unconventional methods for achieving that desired growth. You are not a conventional credit union leader, Greg. You're big on commercial lending, you have a crypto portal, and you offer cannabis banking services. Like, quite frankly, you're the wildest credit union leader I think I've ever heard of, given those three things I just listed off. So my question becomes, okay, cool. There are maybe a lot of unconventional leaders out there. They want to pass ambitious initiatives, but they don't know how to get buy-in. So my question for you is, in all of your unconventional undertakings, what can you teach us about how to get buy-in on forward-thinking, ambitious initiatives?
I think everything that we have done has been consistent to serve our field of membership. So we start there. What is the field of membership that we have need? And then we look around the immediate area and determine what credit union is actually fulfilling that need or not fulfilling that need. So, for example, in the state of Oklahoma, about 2018, I think, 60% of the population voted for medical cannabis. So that was surprising to me. And because medical cannabis is still not a permissible drug at the state level to be banked, what ends up happening is we had people working in dispensaries and grow operations that were actually carrying gym bags full of cash home. So, as a community based credit union, we saw that as a real problem. And how do we resolve that? How do we fix that? How do we help on that? So that's when we started taking those deposits. We have a very robust BSA system that we stay on top of, but it was providing a much needed service in our field of membership, which is a community based around the Tulsa, Oklahoma area. Same thing as it looked for the crypto portal. I mean, most credit unions don't understand that their members are buying crypto now. They're using their debit card, they're using their credit card, and all you have to do is look at what the file that's settling looks like to understand exactly who's buying crypto and how much. So we surveyed our members that found out we had a large percentage of them that were buying crypto, but even more importantly, we found a number of them that were crypto curious. They were interested in it. They wanted to buy it, but they were afraid, they didn't understand. And so we felt like we could offer a solution to them that had education around it and also provided them a much more, what we feel, safer environment to where they can buy that crypto and at least get the first experience. And it settles from their checking or their savings account. So all their purchases and sales automatically comes back into their account at the credit union. On the commercial lending issue, we didn't have any credit unions doing commercial lending or member business lending in the Tulsa area. It's happening in other places in Oklahoma, but that looked like a strategic opportunity for us. We wanted to be less reliant on indirect lending. We feel like the commercial lending was our opportunity to do that. So I think from our standpoint of how we get there by tying it back to the mission and demonstrating how it fits to not only our employees, but also to the board and frankly to the members.
I like what you're saying, Greg, because your compass becomes the member needs. And it has nothing to do with your preferences about marijuana or your personal philosophy on commercial loans or crypto. You've let your member be that compass. My question for you, though, Becky, is what about when you run into other leaders who don't think that way? Meaning, let's say you run into a leader that says, I don't like marijuana. I have personal problems, moral problems with that. Then how do you get buy-in internally? And give us some examples of methods you've used or any situation that comes to mind when I talk about that.
Well, that comes down to that alignment thing again, right? I think anytime you have an organization with more than two people in it, you're going to have people who disagree about certain things. And what I have done and what I have found works is that clear, open, and honest communication. Also communicating the why. Why are we doing this? Is it to make money? Is it to grow? Is it so we all get a raise? I mean, what is the reason why? And when your compass is your member owners, and you can tell by their transaction volume and their behavior what it is they want. Because what will generally not happen is you will not have members walking into your credit union saying, oh, I want to buy crypto from you, or, oh, I want to bring my cannabis grow money into the credit. They don't do that. And you hear that a lot around the organization. The board will say, well, what do the members say? Well, what are the members telling us they want? Well, they're not going to tell you. Okay. They're not going to tell you for a variety of different reasons. But you have to approach other leaders in the organization and you have to explain the why. This is why. This is what the data is telling us. We know that we can serve this need. So why wouldn't we do this? Regardless of how you feel personally about this, that, or the other thing. We have many people who say, I'll never buy crypto. Look, I don't buy crypto. I'm the crypto queen, right? I don't really buy it. Okay. I don't but I don't buy stock either. I don't. That doesn't mean I don't believe in the underlying technology or I have something against other people buying it. So aligning the leadership in the organization is about explaining the why, explaining the purpose, and then achieving buy-in. And a lot of times it's just about, let's just try it. Let's just try it and see what happens. If it blows up in our face, it blows up in our face. We have a risk mitigation strategy around that. Let's just try it. Can you at least do that? Can we walk ahead arm in arm and let's just try it? And most of the time, if they're engaged and involved in the process, they're going to buy in.
What I hear from you both is if you want to pass an initiative, bring the data. Bring the data about what your members are wanting and what they need, and let the member data do the talking. It's 2024 and credit unions continue to chase the same old goals. One of those goals is to be the primary financial institution for your members. However, this goal of being a PFI may not be as achievable as it once was. In a 2014 survey by Radon Research, 44% of people said their primary financial institution was a credit union or community bank. Fast forward to late 2023, and in a McKinsey & Company survey, only 15% of respondents said that they had a credit union as a primary financial institution. Greg, you said that the quest to be a primary financial institution is a fool's errand because the days of being a PFI are gone. What do you mean when you say the days of being a PFI are gone? And if you can't be a PFI in today's age, what should credit union leaders focus on being instead?
There are way too many choices out there in the marketplace for financial services. For a credit union leader, a bank leader to think that they are going to be the sole or primary financial institution that their account holders or members are going to select, that's just not being realistic about the market that we're in. My own two daughters have never been in a branch of a credit union or their bank. They do everything from their phone. My daughter got her mortgage from Rocket Mortgage. It just is so easy today to get what you need from an individual provider. Now, demographics are such that there's a certain age demographic that is always going to rely on their financial institution to provide the services that they want. But the younger that demographic is, the less probability of that. And we have to be proactive in making sure that the services that we do provide are the best that we can possibly do. They're a quality service. They deliver what they're supposed to, that the member walks away satisfied. So the next time when that opportunity comes up, we get another shot at the same business. We don't strive to try to get all the business. What we're looking for is the relationship. The one thing that a physical financial institution will always have over a virtual presence is the physical presence that we have. The virtual works fine until you got a problem. And then once you have a problem, you want to talk to somebody. So that's the other part of our role, is to be there for when things aren't going right, or they don't understand the answers, or they're looking for something different. We gave up on the idea of pursuing a PFI designation in our strategic planning a long time ago. Our focus has been, we want to execute at a level that bring our members back on the things that we get to do, as opposed to worrying about the things that we don't get. And I believe that by demonstrating the quality of that over and over again, eventually wins more business. So while we look at wallet share, we don't expect to have a primary financial institution designation. That's something that if you're operating in a community environment, if you're in an area where you're really competitive, you're competing for market share, that's just not a realistic goal.
Becky, Greg Gallant is proclaiming that the PFI is dead. Do you agree with him?
Yes. I believe that in today's day and age, for all of the things that Greg mentioned, certainly the competitive nature of our industry here in the United States, there are more banks than anywhere else in the world. Okay. Most countries, other places in the world have 4 or 5 banks, and most of them are state run. That's just the way it is. There might be some credit unions there are credit unions in other parts of the world. They're just not as prevalent as they are here in the United States. So there's about 4,700 credit unions here in the United States, $2.2 trillion in assets. It's about 4,200 banks here in the United States. $2.2 trillion in assets doesn't equal Chase. Okay. Chase is multi-trillion in assets. And so what does that tell you? What that tells you is half of the bankable population here in the United States has a credit union account. Okay, 130 million people here in the United States. They have a credit union account. Why? Most of them, because of a loan. And most of those got that through a dealership through indirect lending. Okay, why? Because credit union loans are the best priced. They are in the marketplace. For the most part, you get the best price from a credit union. People know to go into a dealership and say, I want to get a loan through a credit union, because that's where they're going to get the best rate generally. So why is it that half the bankable population here in the United States has a loan at a credit union, but they don't have their checking account there? Why is that? Gen Z, ask a Gen Z where they have their checking account. It's Chase. It's Bank of America. It's Wells Fargo. It's Citibank. Why? Because using their app is better than using the disjointed user experience that a credit union offers to its members. So we have to get better at the user experience. We are experts at helping people in person. We do a great job at that. We do a terrible job with the user experience in a completely 100% digital world. Why? Because the core database systems that we're using to integrate with these brand new fintech firms are more than 40 years old. The tech just doesn't work very well together. It's clunky. It's disjointed. It's not a good user experience. I talked to a Gen Z person not long ago, and I said, why don't you just move your checking account to your credit union? You love your credit union. That's where your car loan is at. And you know what they said? They said, I've been trying to move money there for 3 months and I can't. I can't. So why would I do that? If it's hard to move money, I can only move it $150 at a time. That doesn't make any sense. My paycheck is 10 times more than that. So it is difficult to do business with credit unions. I don't expect any financial institution these days to be a PFI, even Chase, frankly. It's just not going to happen. There are tons and tons of opportunities, lots of fintech like banks that act like banks. Let's talk about Chime, who really has a bank on the back end, but they make the user experience the most important thing. So when Greg talked about putting the member first, that's one of the things that I think we can do better in the future as an industry to make that digital user experience as good as the personal experience.
So just to clarify, you're saying that the pursuit of being a PFI is like a marriage. It's this notion that I am going to have my members tied to every single product with me. And then you both have more of an open relationship type of marriage that is, it's not that I'm not going to try to get you, increase the share of wallet. It's just that I'm accepting the idea that I'm not going to be able to please all of your needs. That's basically what you're saying. Correct, Greg?
Yes, but please don't tell my wife.
I mean, if that's the analogy you're going to use, that's fine. But ultimately, look, it's a big market, okay? Credit unions, banks, we can all play nice together. Do you remember, Greg, when fintech, so it was like a dirty word? It was like, oh, they're trying to replace us and we shouldn't work with them. Well, Now that is 100% not the case. We're like, come on in. We got to work with you. You provide technology we can't build ourselves. So things change. It's okay to have your loan someplace and your mortgage someplace else and your checking account someplace else. All I'm saying is that people are going to flock to where it's easiest to do business.
Well, and yes, they're not beholden to any one place. And to your point, the top 5 banks in this country control 50% of the deposits and 50% of the loans in the entire country. So there is a tremendous amount of concentration in very few financial institutions. And those institutions have far greater sums of money to invest in that user experience to deliver a product that is far greater than what an individual credit union, and I don't care if you're 30 billion or 100 billion or $1 billion in assets or 5 million, you are not going to have the resources that those other financial institutions have. It's just not going to happen. So you can't outspend them. We're in a commodity business. So you got to carve your niche. You got to excel in the areas that you really want to excel in and be satisfied with that. You're not going to get it all.
That brings us to the end of the show. Greg, do you have any final thoughts?
I think one of the things that came out that I think is important to stress on is that if your organization, credit union or not, if the leader of that organization is only focused on the things that they find personally agreeable, then they aren't doing their job because they don't have a corner on what products and services you should be offering. And you're not really identifying with your membership. So I think you have to step back and step out of the way and really start providing services that your members actually want, not just the ones that are agreeable for you.
And how can people get in touch with you, Greg? If somebody listens to this and they're just like, I need to get a hold of them, what's the best way to reach out to you?
My email address, probably, it's ggallant@westreet.org. That's GGALLANT@westreet.org.
Becky, give me your final thoughts.
Talking about innovation and emerging technology and leadership in a credit union, I think is important. And Greg highlighted some of the reasons why that is important. Unfortunately, there is a bit of an epidemic in the credit union space regarding leadership. There are many folks in leadership that are afraid to step out and do something that might be a little bit on the edge. I know many, many leaders who say that is too risky. I'm 3 years from retirement, not doing it. And unfortunately, I think that is a travesty. And I love Greg's approach, focus on the member. Focus on the member. And I think leaders should be focusing on that more.
And how can people get in touch with you?
LinkedIn is the best place to reach me. I'm all over LinkedIn, as well as, touring the country all over the place too. So if you see me speaking, come up and let's have a conversation. But LinkedIn is probably the best place.
I want to thank my guest today. I want to thank my co-host, Becky. I want to thank my sponsor. And of course, most importantly, I want to send a special thanks to you, our listeners, for continuing to support and listen to another episode of Grow Your Credit Union. Remember, if you like the show, please follow us on your podcast player of choice and share an episode with someone who would benefit from listening. If you want to be a guest or you would like to talk about sponsorship opportunities, head to growyourcreditunion.com to learn more. Thank you for listening, and we will see you next time. Take care and bye-bye.